Hello, Virginia. Welcome to our webinar. We're just going to wait another minute so that everybody can have an opportunity to join if they want to. Hi. Thank you everyone for joining. We welcome you to our first webinar of 2023 of our 10 webinar series. It's our first one this year.
Yeah.
Happy New Year to everyone. What a year it's been. Hope everybody is having a productive start of 2023 as we are. Should we get started?
Yeah, so there's probably a few more people probably jump on, but we can rip into it.
Wait till
Yeah.
12:31.
Yeah, give it another minute.
Yeah, we'll give it another minute and we'll jump on.
Yeah.
Just a quick sound check. Can you let us know in the chat if you can hear us and see us well? Right. Okay, we're going to get started. Just going to share today's presentation.
Awesome. So today we're talking about why invest in industrial property. So we're going to go through the pros of industrial property, compare it to a few of the other asset classes. There's always pros and cons of each asset class, obviously, and then why we buy industrial property and the objectives, what we're trying to achieve. So why buy industrial property? So, I mean, one of the key points of industrial property, or why people enter the market for any commercial property really, is as part of their retirement plan. So people buy commercial property or industrial property, commercial property for a retirement plan in the future. So they buy now with the objective of either reducing debt or, depending on the strategy, holding the debt as it is whilst the property grows in equity and cash flow, which is one of the most common strategies we see across the board.
Investors.
Yeah, which many of our investors do. The second reason why people buy industrial property is to operate their business from. So this one applies to a lot of owner occupiers. So a lot of owner occupiers will buy industrial property to have their own business in, rather than having a lease where they're paying rent. So they basically can control the building themselves. And then they can write a lease back to themselves and often sell the building later on as a sale and lease back, which is quite common. We see a lot in the market, but that gives the owner the advantage so that they can secure that lease in their terms and for a longer period of time. So it's quite a good strategy that they have. Another reason is to achieve a better long-term return than is currently available through other investments. So we've got some slides later on which will show you comparisons, but industrial property has always outperformed other asset classes within property, and it's also sometimes performed the share market and the NZX 50 on average. I know shares can go up and down. It's less volatile with commercial property as well. And what we like to do is influence a lot of the value from their own leases. So we basically can control the lease by renegotiating it and creating value ourselves. So that's something we talk about in a few of our other webinar series on how to create that value, which can help achieve those longer term returns. Another reason is to diversify their investment portfolio. So I just touched on shares on that last point. Shares can be quite volatile. They're still good, and there's definitely recommendation for them. But to diversify that portfolio, it's often a lot of investors have some kind of property within their portfolio. Some residential investors also look to diversify into commercial, and we definitely advocate for the industrial property. We really prefer industrial property to other asset classes, which you'll see why very soon. Another reason is to avoid the increasingly regulated residential market. So that's something that's happened over the last 3 years. Well, it's been happening, but over the last 3 years, it's become a lot more restrictive with the RTA and certain requirements, whereas industrial or commercial property in general, it's all based on what's in the lease. So obligations of a landlord is set out what's in your own lease. So that's why we really like residential commercial property, because the obligations are set out in the lease, so you know your obligations, whereas there's a governing act for the residential market.
Yeah, because as an owner, you're dealing with a business, not a person. So that's obviously both sides can agree on pretty much whatever they think is fair,
Yep.
whatever suits them.
So why people buy industrial property? So it's a safer investment. So you can see from the commercial property returns just here on this chart, you can see over the past 15 years, industrials in blue. This is from Morgan Stanley Capital Index. You can see industrial property has outperformed the other asset classes. The other asset classes do have their merits, retail and office, obviously, but in general, industrial has always outperformed it. And it's less volatile and less risky, which we'll cover in a minute as well. So
the objectives of people that are investing.
Yeah, so those are the reasons. So we've just said why people buy and some reasons why they get into commercial property, but it's always good to have objectives in mind. So you're not just getting into property because you've got a reason to, you've got to have the reason. And so what are your objectives in getting into commercial property? A big number one for it is diversification. So we touched on that before, diversifying people's portfolios, whether that be they've got existing residential portfolio, maybe they've got a share portfolio. So to get into that industrial market, industrial is very safe and generally speaking, longer term tenants and it's easier to re-tenant as well, especially in good areas. Which we'll touch on soon. It's much less volatile, and as I said, it's easy to re-tenant a building. From experience, we've been doing this for 10 years now, and it's really easy to change tenants over. So that's so diversifying people's portfolios, and then that touches on lower risk as well. So the industrial is much lower risk. It's a stable return, generally around the 6% mark, depending on the cash flow. But you've also got those equity growth, and that happens over time with lease renewals or lease negotiations and rental increases. So you've got that opportunity where you can actually increase the value or the return yourself by renegotiating those leases, which we do for a lot of our clients and especially for the fund. And that brings into the cash return. So you get a really good cash return after paying your mortgage, which could be P&I or interest only, but you can actually influence that cash return based on increases in the lease, the rental, or the term. So that's quite good.
Not only that, but also your operating expenses are minimum, because as per the lease, the tenant is normally whatever your lease says, but in a lot of cases, the tenant is actually responsible for operating costs, which obviously, for example, in residential is not the case. You get the rent and then you have to cover things like rates, repairs, plumbing, all that. Whereas for a commercial property, if you have a good lease, most of the time tenants have to pay for that, and you only have to pay for the capital expenses. And in some cases, which we actually have a few of those, where you don't even have to pay for that. So you get to obviously affects directly your cash returns, because out of that you don't have to pay those expenses.
Yeah, so that's the triple net. The triple net leases, they're the best type of lease you can get. So that's when the tenant also pays the capital expenditure as well. So they pay the outgoings, and on top of that, they pay the capital expenditure with the rent as well. So that's the triple net, so the 3 areas. So that's the best lease you can get. We've got a few of them in the fund. I've seen a few of them with individual investors' portfolios as well. So if you can get a triple net lease, that's the best type of investor you can get, best type of lease you can get, best cash returns, and also definitely the lower risk. So it meets a couple of those objectives there. And the last one's capital growth. So capital growth, as I said, it can be influenced by renegotiating the lease, the increase in the return. So over time, when you've got those market rent reviews, you might have CPI rent reviews. CPI is very high right now, so you can increase the rent, and that's going to be reflective in capital growth as well. So you got to, before you get into industrial property or commercial property, you need to think, what are those objectives and what are you trying to achieve? Which was very common with a lot of our investors as well.
And whether that your investment is going to match those objectives.
Exactly.
Yeah. So let us take you through the types of property first. So types of commercial property. We have heavy industrial, which is this is actually a picture of one of our properties. They have a track a truck service in bay, and that's considered heavy industrial. Another example of heavy industrial are factories, mechanical service and demolition sites, and they're normally located on outskirts of the city or central industrial precincts away from residential, which are areas that we like.
Yeah, definitely. It's a very limited supply of heavy industrial, especially around Auckland right now.
Yeah.
So if you can get a property with heavy industrial, I know there's a bit of a stigma with certain contaminated land and what have you, but it's such high demand because there's only such a small area, especially around the Auckland, that you can actually have those type of tenants in. So we really like heavy industrial. It's a really good use. So.
Then light industrial, so that's just a subset of industrial property. It's more to do with distribution centers and food manufacturing. Then retail, pretty straightforward. It's your shopping malls or just a block of shops, your takeaway stores, any shopping kind of stores, or retail complexes as well. Offices, just like the one we're sitting in, that's just a commercial building that's designed for office workers. And we actually do deal with this a little bit because some of our industrial buildings have a part of that building that's just repurposed for office use. But then they also, of course, can come as separate buildings or even with a retail downstairs and an office upstairs, like a mix of different ones. And short stay accommodation, which is also considered a type of commercial property with motels, rural pubs, backpackers, hotels, and luxury retreats. So those are your main 5 types of commercial property.
And there's definitely pros and cons about each type of asset class just then. And they've all got their merits and downside as well. Our favorite is definitely industrial property. And why we like industrial property the most is, number one, generally they're single tenants. That's not to say other buildings such as offices, you've got multi-stories of office rather than standalone. Standalone office can be quite risky with one tenant in, because of that, especially in Auckland or throughout New Zealand right now, the vacancy rate for office and retail is substantially higher. With industrial, it's substantially lower. So if you've got a single tenant, it's not considered such a risk if that single tenant leaves. And generally they're bigger warehouses as well with those single tenancies. You can also have smaller warehouses with single tenancies. And what's great is if that single tenant leaves, you've got that option, low vacancy, easy to re-tenant, or you could actually have multiple tenancies. So you convert that single tenant to multiple tenancies, and it's very easy to manage. So single tenants they're really easy to manage as well.
Exactly.
Yeah. And then versatile. So I've just touched on that. So industrial property can be very versatile. It's easy to change tenants or split into multiple tenancies. So basically, you've just got a shed. That's generally speaking, it's just a warehouse. So it's got four walls and a few roller doors. And what we look for, especially in the properties we look at our due diligence on, is we look for what buildings have multiple roller doors. So we've got one in East Tamaki, which has 4 roller doors. So it's currently got a single tenant, which is North Powell, one of our tenants. And they've got a long warehouse with 4 roller doors all along it. They occupy the whole space. Now, if that tenant wants to leave, it's in a really good area, East Tamaki. We can easily find a new tenant for it, but gives us the option to split into different tenancies. So we could put inter-tenancy walls through each bay and split it into different tenancies. So it's so easy to do, put some bathrooms in, put the inter-tenancy walls in, and you've got a multiple tenant building, which you've just changed from your single tenant. Often by doing that, you've would add a substantial amount of value and gone from a single tenant to a multiple tenant building.
And that's a good example of value add thinking that our acquisition and asset management teams do here in Provincia, just having that before we buy or doing our due diligence, or even when we manage, knowing what we could potentially do with the property.
Yeah, and that's something I encourage, why we like industrial property for individual investors. That's something to look at, is to say, if I buy this property, what can we do with it? Can we get another tenant easily? Generally, yes, with industrial property, but is there opportunity to split that property into multiple tenancies? Or can I reconfigure the property? That's another major one, which is often really easy to do, especially with an industrial structure. Scarcity of industrial zoning. So I touched on that when we talked about heavy industrial. It's such limited parcels of zoning, in particular around Auckland right now. So if you look on the you know, bird's eye view of Auckland, or you pull up the unitary plan, you can see the light industrial zoning in light purple and the heavy industrial zoning in dark purple. And you'll see how much limited supply there actually is around Auckland. And especially, you know, we find with a lot of tenants, they actually want to be closer to distribute their goods and closer to the main transport hubs. So those areas are actually quite locked off, like Mount Wellington, for example. It's completely developed. You've got residential all around, and you've only got that pocket of industrial land there. So that's keeping that demand very high for industrial space and industrial buildings. And that's common with all the major cities throughout the country as well. And greater diversity on what you can do with the space. So we touched on that before, but again, that's why we really like industrial property, because it's so easy to change a warehouse into something else. So you could have a tenant that's a a distribution company distributing goods. It's so easy to change. If that tenant leaves, you can get a number of other tenancies in. You could get, depending on the zoning, light or in heavy industry, you can get different tenancies. You could get a, you know, you can even convert to food grade, or the other way around. If you had a food grade tenant, you can rip out the food grade fit out, and you've got a warehouse, and then convert it to what tenant you wanted. So it's really, really good, really easy to do. It's really cost effective. And generally the tenants also stay for a longer periods of time as well.
Like, for example, with office or retail, it would be with every new tenant, there would be quite a lot of work to do the fit out. Whereas with industrial, if it's a good building, normally not much is done. Yeah. So with an office, especially when there's turnover in tenants, there's generally a lot of office refurbishment that needs doing. Generally, that will be passed on to some of it to the tenant, but sometimes to the landlord, and that's each time they go. Whereas with industrial space, you could just use the same shed with a different business use. It's really common. So that's again why we really like it. And otherwise, there's such a huge demand for multiple logistics companies, multiple distribution companies, with warehousing at the moment as well, especially in Auckland. And yeah, longer term leases, that's generally speaking, you get much longer term leases, especially with the larger warehouses. So the warehouses that are probably above 500 square meters, anything north of that, you're generally looking at leases of 4 years plus. We're seeing really common in the market right now, even we're getting 8 to 10 year leases. So really long-term leases with tenants that really want to commit for long-term, which is really good. With office, you don't see that as much, and especially with retail when there's a lot of high turnover. And as I mentioned, it's so easy to manage and maintain. Laura, you just touched on that before with the services. Generally speaking, with industrial, there's not a lot to the buildings. It's a shed. There can be a small fit out with toilets and office, but it's really easy to maintain them. It's really easy to give them water blasts once a year. And you know, it's compared to the other asset classes. It's all about practicality.
Yeah, definitely. And best long-term returns. So I think we touched on that in that previous graph, showing the returns of industrial property from Morgan Stanley over the 15, 5 and 3 years, and it's always outperformed retail and office. So, and that's generally because the tenants are quite stable. There's long-term leases. It's easy to change those tenants, especially if one gets into trouble, and also it's easy to renegotiate those leases. It's also
less dependent on economical or political change as well.
Exactly.
Which is in this environment quite important.
Yeah, definitely. And the scarcity of zoning helps that demand as well. So we've touched on that there as one of the other reasons why we really like industrial property. That scarcity of zoning contributes to that best long-term return. You know, with the demand being substantially high. We're also seeing square meter rates in the current market really going up right now. I mean, this time last year, we were probably sitting at about 125 to 135 prime office space. Prime industrial warehouse space. Now we're sitting at $150 a square meter, and north of that in Auckland. So.
Now that we've taken you through why we like industrial property so much, we just go into talk a little bit about the fund itself. So we here, one of the things that we do at Provincia is making industrial property investment more easy and low and less risky for investors. So you fall in love with industrial property. There is still a lot more to it, as we know, because we've been dealing with it for very many years. And for people like you, our investors, it's sometimes it's easier to take advantage of all of the benefits that we just talked through with us, because our minimum investment is 50,000, and then we also obviously do all of the looking for the property, all of the managing value adds, and also your we make your investment less risky because it's diversified. At the moment, we have 13 properties in our fund. So obviously, whoever invests in Provincia becomes an part owner of all 13 properties. And our mission has always been and continues to be to create a diversified portfolio of value add properties in the outperforming industrial property sector to provide long-term competitive income and capital gains to shareholder. And what that means is in our strategy, we choose industrial property, which we've just explained why. Value add is very important because that makes sure that our investors take advantage of the growth of the value, the capital growth of their investment. And we've just touched on how we do that. There's very many ways we do that through, and we'll also have some more webinars that talk about value add and how we do it. Areas with sound economics, which is the reason why we've always had 100% occupancy. We always find it quite easy to find replacement for any tenants that want to leave for whatever reason. And that again just creates that steady cash flow for our investors in dividends. And the range we'll look at is 5 to 10 million, which we find easiest to retenant, easiest to manage, and again just adds to that safety of your investment. So that's what we're about at Provincia. And so on the topic, there were some FAQs that we'll answer, and then also we'll have an open floor for any questions that you have. First question, why is industrial property better to buy than office or retail?
It's quite a common one. So we prefer industrial property, I think, on the reasons we've just touched on. A big one for us is the performance, and then the second biggest is also the safety of that return. So we're seeing in the current market, if you look online right now, especially comparing asset classes and what's for sale, you'll see that office and retail generally have higher returns right now. And that's fine than commercial property, than industrial property, sorry. And the reason for that is you're buying that higher return because there's a higher risk associated with that return. So you'll see for Hamilton, for example, we're looking at probably about 5.5 to 6%. So that's your return, 5.5 to 6% on industrial properties in Hamilton in the current market. Whereas if you looked at office buildings in the Hamilton market, I'm using that as an example, there's some selling for about 8%. So that better return on the office, but the downside is you carry a lot more risk with that office. If that tenant wants to leave or vacate, it's a lot harder to re-tenant that building. And as we touched on before, you've also got a lot of, you might have to have refurb. If you do find a tenant, you're going to have to probably do some office refurbishments. Whereas industrial, it's much safer. So slightly lower return on the initial cash, which is 6% in Hamilton, 5.5 to 6. But you've always got that upside, and you've always got tenants that want to stay. And if that tenant does want to leave, on the off chance that they don't want to stay, it's easy to pull another tenant in. And when you pull that other tenant in, I'm confident it's very easy, especially in the good areas, and you can get a much better lease. So then you've actually added that value, which increases the return of the cash return and also the capital gain, because you've got a stronger lease with better returns. So that's why industrial property has been outperforming, even though it looks like you can buy office or retail as examples on better returns right now.
That's one of the first questions that we ask when we find a new deal. We say, if the tenant leaves tomorrow, how easy it is to find a new one? Yeah,
that's the biggest one, because it's return of your money as well. So we always look at what is the return of your money. So we've got to protect the investment and then pay that dividend. So that's what we do. And then we look for what is the growth within the building. So every building we've got in Provincia in the fund, we've got value add locked into each building. They're all different ways, but there's always value add points. And that's what we encourage individual investors. If you're looking to invest in our fund, we go through that and we can explain each property where the value add is, or if you're buying a standalone property yourself, where the value add can be. It's something to really look into. And with industrial, it's very easy to create. With retail and office, you can still do that. It's just there's a quite an element of risk.
Yeah. And the second one, what is the first step to get into industrial property?
So I think the very first step would be you want to make sure you've got your funding in place. So that's probably the majority. Lots of banks right now, they're lending 65% against industrial property.
Which
So-
means you have to have 35%
Deposits, yeah. So that could come from residential portfolio, but it can be quite substantial. I mean, that's probably the biggest hurdle, but that's the number one to start investing in industrial or commercial property, for an example, if you've got to have that deposit coming from somewhere. So once you've got that sorted, that would be the very first step, is to make sure you've got your deposit sorted, and then you start hunting with agents. But you want to make sure you've got your objectives set. So why do you want to get into commercial property? We touched on objectives today. So you want to set why you want to. Is it diversification? Is it for the cash return? Is it for that future growth? So why are you trying to get into it, and what is your goal to achieve, and what is the time frame? So you got to consider those points once you've got your deposit lined up, and then you want to start looking in those growth areas to achieve those objectives in good areas as well. And so we can help with that as well, especially with the fund. It's actually a lot easier because when you've got properties above 500 square meters in industrial space, it's really easy to get those value add.
which is what the
What-
price point.
Exactly. So the price point, generally, we're looking at anything north of probably 2 million. The fund looks at anything north of 4 million. So we're sitting on properties around 5 to 10 that you touched on as part of the strategy for the fund. And those properties are really easy to unlock capital gain and also value add, which is something we really look at. And to get into the fund, that's a much lower, easier to enter, because the minimum investment is 50,000, and then you also get all the benefits of industrial property and the value add that we try and bring through to all of our investors. So for example, we're always looking at how we can increase our cash return with those future value add, those future lease negotiations, and those upside in the rent per square meter that we have built into the fund. And we're always trying to renegotiate our leases with the tenants for longer term leases to reflect the value and also to increase the returns.
So we provide the expertise, we provide our own expertise on finding the property, managing the property, unlocking the value add opportunities, and obviously diversification, because we do have 13 properties in our portfolio, in our fund portfolio, and you can enter with as little as $50,000, which is significantly less than a deposit for a 2 million or 4 million property.
Yeah, definitely. But yeah, still definitely the best asset class, and that's the first step we'd definitely recommend taking if you are considering getting into the market.
Cool, and we are just going to answer any questions that anybody has on the topic. I'm just going to stop sharing the screen, and the floor is open. You just have to unmute yourselves first because everybody's muted if you wanted to ask a question, or just type it in the chat.
Here's one here. So can you please explain how you value an industrial property and the factors that determine how the value of that industrial property increases over time? So that's really, really good question. So from Sandeep. So can you please explain how value an industrial property? So we're valuing an industrial property. The valuer always, so this is how the valuers approach it. They look at comparative evidence in the market. So when we get our valuer to look at our properties in the fund, for example, they'll look at comparative properties of that certain area. So if we use the property we've got in Carbine Road, which is in Mount Wellington, so they'll look at comparative industrial space in Mount Wellington and what the current market rent is. So what is the current market rent that other tenants are paying in the industrial space in that particular market of Mount Wellington, as opposed to, you know, Wuri or something, where that property is located. They'll look at those comparative market rates and then compare those comparative market rent per square meter to the rent per square meter that we're getting off our property. So is our property under rented or over rented? So they'll do an analysis on that. Then what they'll do is they'll look at comparative market evidence on sales evidence. So where is the sales evidence for in a particular area? So this one, Mount Wellington, they'll look at what warehouses, comparative size and space are selling for. And then they'll compare those sales to, is our property arguably better or worse? So they'll come up with a cap rate. And then what they do is they'll put them determine the market rent that they're getting, and they'll apply a cap rate to, sorry, the passing rent of our building to the particular cap rate versus market rent, and they apply a cap rate to the area, and that's how they come up with the value. And so to affect that cap rate that they apply and make our property more attractive, that's always on the lease terms. So how can we get the lease terms better? So how the value of that industrial property increases over time, we're trying to get those either better terms within the lease. So that could be the lease is going from a 2-year lease or a 3-year lease. So it could be on a 3+3+3 to a 6+6+6 or to a 10-year straight lease. So that increases the term of the lease, which the value is then lower the cap rate because that's a lower risk. Or we might get personal guarantees on the lease, or we might get a bank guarantee. So a 12-month bank guarantee. So that always lowering the risk, which in turn helps the valuer lower that cap rate on a comparative basis. So they'll apply a lower cap rate to their valuation method. So that's how they do that. And then the other option is to increase the rent, because if you increase the rent, provided it's not hugely above comparative and market, then when you apply the cap rate to that higher rent,
You change the other part of the equation.
yeah, that's a higher value.
And then you get a higher value.
Yeah.
Great question, very big question.
Yeah.
We can talk a lot about it. We'll probably we have scheduled a separate webinar about it because raising values of industrial property is what we do here.
Yeah.
So yeah, that's a short answer, and there is a big answer coming.
But that question is actually really good, because it's a key question we always ask ourselves too.
Exactly.
When we're doing any acquisitions with the fund, before we put a property into the fund, we look and we encourage investors too. If you're looking at buying a property, what can you do in the future to increase the value in that particular property? So before you buy it, what upside does that building have? That's your number one question that you always ask. So yeah, is there any other questions, or
did that answer your questions, indeed?
Yeah, thanks. Cheers.
Anyone else?
Well, hopefully this was just educational enough.
First one back. We'll get into more detail in the future ones, won't we?
Exactly. Well, if there's no more questions, thank you everyone for attending. We have a current race running. If you are interested in that, please just type something in the chat and we will send you the latest investment statement. Or if you have any further questions that you wanted to speak privately to us about, also write down something in the chat and we'll give you a call afterwards. Or of course, you're always welcome to give us a call or send us an email if you have any questions or just wanted to have a chat.
Yeah, and thanks everyone for attending and listening to us. It's really appreciated.
Yeah, the webinar is recorded and we will send the recording to everyone that attended.
Brilliant.
Yeah, if your email address is correct when you registered, I'll just write down that you requested and I'll just make sure that we'll send it to you.
Thank you. And we're running another one on Thursday next week as well, 12:30.
12:30, same time. We'll be talking about leases, commercial leases, big topic. And Sandeep, that's actually another one, a great way to also affect the values of the property. So come along, it should be interesting.
And we'll have Carl back there for that one as well.
Yes. Thanks, Julia.
Excellent. Thank you. Yes.
Thanks, everyone. Have a great weekend.